to the DCA, Dunedin Community Accounting Introduction to Being a Treasurer. E ngā tangata kua haere mai e ki tēnei hui, ki te ako I te kaupapa o te kote, tēnā koutou, me he nui ki a koutou. Welcome to the people of you coming to this webinar on accounting, community accounting. Welcome and thank you for being here. You being here has made this possible. E ngā tauira ko te o te whare wānanga o Otakou, tēnā koutou, me he mihi ki a koutou. Welcome and thank you also to the accounting students of the University of Otago that are sitting around me in this room. Again, without you, this webinar wouldn't be possible either. So, tēnā koutou, tēnā tātou katoa.
Hi, hello everyone. I'd like to thank you all for participating in this webinar this evening. My name is Alice and I'm your first speaker. There will be a number of us taking you through the slides this evening and we hope you gain some valuable insights into what it means to be a treasurer. If you have any questions, feel free to type them into the chat box on your screens where we will answer them at the end of the presentation, or you can ask us directly at the end. So tonight we'll be discussing the role of the treasurer and their functions, legislation behind financial reporting for not-for-profits, cash for accrual accounting, Tier 4 charity obligations, IRD requirements, accounting software, as well as the other responsibilities of the treasurer that help make end-of-year reporting easier. So the role of the treasurer is to maintain accurate financial reports that fulfill the requirements of both the board and law. So some of their responsibilities include receiving all money and depositing into bank accounts approved by the board, paying out money in payment of club obligations with authorisation of the board, maintaining records of all receipts and disbursements, preparing financial reports, passing on financial accounts, funds and records to successor, and overseeing signing authorities' financial controls and segregation of duties. The main goal of the treasurer is to maintain a feasible system that keeps the club solvent through careful planning and monitoring. I'll now pass on to Kerry.
Hi, my name is Kerry. So I'm here to talk about the legislation. So there are certain requirements that need to be met when preparing and filing your financial statements. And these legislations are specific to not-for-profits. So you need to find what is relevant to you. So I've given a couple examples here on the slide. I've got a registered charity would use the Charities Act, or if you were a building society, you'd use the Building Societies Act. And these acts will provide relevant information and guidance on what is required of you. So back to the registered charity example, part of this legislation requires the charity to produce an annual report within 6 months after their balance date. And this is stated within the Act. That's just one example of a requirement. And the last bullet point there on the slide mentions the Financial Reporting Act. And this includes some definitions, which is a really great place to go. For example, if you weren't sure what exactly determines an accounting period or how a balance date should work, this is a really great place to go. So there are 4 tiers that you can fall under the XRB standards. There are different criteria to meet each tier, and each tier has their own accounting standard. So most of you will likely be in tier 4, which is what we'll look at in this presentation. That's the bottom row of the table on the screen, highlighted in white. So for tier 4, the criteria is that you have expenses that are less than $125,000. And this will then mean that you use a simple format reporting standard and cash accounting, which will be covered by Mohammed in just a second. It's also important to note that these requirements are more than just financial, so more than just your numbers. So we'll mention later on the statement of service performance is also needed, which includes some non-financial measures as well. Of course, if you have any trouble understanding reading these acts or even finding what act is relevant to you, you may even just have a few questions. That's exactly what Dunedin Community Accounting can help you with. Sometimes it is so much easier to clarify things by talking with people rather than reading acts online, and that's exactly what we're here for. I'll now hand it over to Mohammed.
Hello and good evening, everyone. So my name is Mohammed, and I'll be talking about cash versus accruals accounting. And so the first one, the cash accounting. So it's basically income and expenses are recorded when the money is paid or received. So since most of you today here are in Tier 4, so you'll be required to use cash accounting. So you will most likely not need to be concerned about the actual accounting. So for example, for cash accounting is, let's say for today that you went into a shop and then you decided to buy a laptop for $1,000 for cash, and so that's considered as a cash accounting. And the next one is the accrual accounting. So it is basically income and expenses are recorded when they are incurred, regardless of if the cash has been paid or received yet. So this accounting treatment is basically for Tier 3. An example for this accounting is that, let's say for today, you went into a shop again and you decided to buy a laptop for $1,000, but instead of paying for cash, you receive the laptop first and then you pay it by monthly basis instead of just once for all, I guess. So, so I have two examples, and I'll give some time for you guys to figure out whether the two transaction, which is the cash or accruals accounting. Yeah, so first one, for the phone today that costs $700 that will be paid monthly. So this is an accruals accounting. And the second one, receive cash for $25 for a shirt sold today. This one is considered as cash accounting. So the main key points for the cash versus accruals accounting is that the timing for recognizing income and expenses. So the next, I'll be heading to Evans, and he will be talking about Tier 4 charity. Thank you.
Cool. Thank you, Mohammed. Hi, everyone. My name is Evan, and I'm going to discuss the obligations of a Tier 4 charity. So a Tier 4 charity is a charity that has annual expenses less than $125,000, as mentioned by Kerry. And a Tier 4 charity can use cash-based accounting, so you don't have to use the accrual basis accounting. You can just use the cash-based accounting instead. Tier 4 charities also have no public accountability. So as a charity, you are accountable for the money that you have since it's public money. A good way to show how you spent the money and what it was used for is to prepare the performance report. So this contains the financial statements of the charity. Funders will also often look at the performance report as well. So the rules that govern the charity will direct them legally as to what type of performance reporting is required. However, it is good practice for a charity to have a process to ensure the money that they handle is being used correctly. The performance report will be telling the readers about the story of the charity. So this is where readers will learn more about the charity, since they can get both financial and non-financial information regarding the charity. So the 5 parts of the performance report are the entity information, statement of service performance, statement of receipts and payments, statement of resources and commitments, and the notes to the performance report. So starting with the non-financial information, the entity information that will give the readers a brief explanation on your charity's purpose and function. The level of details will depend on the size and complexity of the charity, and overall it's to give people an understanding of who you are and why you exist. Moving on to the statement of service performance. So this is where you share all the awesome things that you did during the year and what your achievements have been. So this will help readers understand more about your charity targets and activities during the year. This aims to tell readers about what you did and when was it done, and it should show, is anyone better off, and if so, how? So moving on to the notes to the performance report. So quite often you'll record some transactions in a group, such as the category donations, fundraising, and similar receipts. So this category can be broken down further into separate fundraising events. For example, street collections versus postal appeals. And this just makes it easier to compare the success of different fundraising events over time. So for the notes to the performance report, we've got some notes that are required by the standard, as you can see here on the left. And then there's some other notes as well that are often disclosed, but they're not required by the standard. So starting with the first one, how did we do our accounting? This is where you say whether you prepared your financial statements on a cash or accrual basis. And you also state if you're GST registered as well. So any significant errors from last year's performance report, they must be addressed in the current year's performance report. Moving on to related party transactions. So this is a transfer of money, goods or services between a charity and anyone closely associated with the charity or who can significantly influence the charity. So for example, if the treasurer sold a vehicle to the charity for $10,000, these type of transactions are allowed, but they do have to be disclosed accordingly. And then finally, events after the balance date with the nature of the event and an estimation of cost. A good example of this for everyone is COVID. So many people's financial year end was the 31st of March. Of course, with lockdown and everything going on, there are a whole bunch of events cancelled, street appeal cancellations, things like that. So anything after the balance date, and if you can estimate the cost, this needs to be reported as well. And a couple of other common notes as well, so how we were funded. So this just gives a further description of receipts such as donations and grants. You can show where your money actually came from. And similarly with the costs, you can further describe where your money actually was spent. Cool, so moving on to the statement of receipts and payments. So this is where you report all the money received and all your money paid out. So this helps you keep track on all your cash going into and out of the charity. So it's a little bit similar to a business's income statement, except we use the term receipts for income and payments for expenditure. The reason why we use these terms is just because these are the ones that are consistent with these standards, and any of the templates that you find on the charity.govt website will use the same term. So just for consistency, we're just going to say receipts and payments. So your receipts are all your cash, check, and deposits into the bank account. Your payments is all your cash, checks, and deposits going out of the bank account. So I'm going to pass over to Felix now, and he's going to talk a little bit more about the statement of receipts and payments and give a few examples.
Hi, I'm Felix, and I'm going to run you through the financial side of the crime performance report. Examples we've used are free and accessible from charities.gov.nz. Firstly, we'll look at the operating receipts section, or in English, money that comes into your bank account. So a few examples we've got up on the screen here are donations, subscriptions from members, or receipts from providing goods or services. So I can just draw your attention to the first line under operating receipts. You can see that was donations, fundraising, and other similar receipts. That totals $13,000 for the year. The other items below that are just similar receipts. So now moving on to the operating payments, just a reminder, this is the money that is leaving your bank account. Examples of this include fundraising payments, volunteer and employee-related payments, and operating expenses. So operating expenses may include things such as stationery or other things like that. So again, if I can just draw your attention to the first line, payments related to public fundraising, that totaled $713, and below that is other examples as well. As a part of this, we've also got capital receipts and capital payments. Capital receipts involve cash coming into your bank account from transactions that are considered one-off and are not regular payments, not regular parts of your day-to-day operations. Examples of this include maybe selling a car from your charity or taking out a loan. On the other hand, we've got capital payments, which involve cash leaving your bank account from transactions that are considered one-off. Examples of this include maybe buying new sports equipment for the use of your members or paying back a loan. So now we'll move on to the statement of resources and commitments. This shows readers about the charity's resources, which are things that your charity may own or is owed, and the charity's commitments, which are obligations your charity has at the end of the year. This is very similar to a business's balance sheet, if you've ever heard of that before. So now moving on to some examples of this. Firstly, we'll look at the schedule of resources. We can see on the first line, this being the company's bank account, which equals 9,154. Other examples of this could include investments, vehicles, or even maybe expensive sports equipment. You can see below where it says description and source of value. This kind of breaks it down. You can see they talk about library books or even computers at cost. So now moving on to the schedule of commitments. Again, a reminder, this is what the charity owes. Examples of this could include payments for a lease, or maybe payments for an employee that you've hired, such as KiwiSaver, or pay as you earn tax. And the last section, schedule of other information. This section is useful for giving readers more information about any donations or grants you've received, specifically surrounding any conditions upon these grants. Now I'll pass you over to Zoe to go over tax terminology.
Thank you, Felix. So first of all, we're just going to go over some terminology around tax, because the IRD uses different terminology than we use around Tier 4 financial reporting. So when we refer to IRD requirements, this is things like pay as you earn, income tax, and GST. So previously we've been talking about receipts. When we're talking about tax, we refer to this as income, and then for expenses, we've been talking about these as payments. They essentially mean the same thing, it's just slightly different terminology. Cool. So in the unlikely event that IRD audits you, they will require all records for a period of the last 7 years. These need to be well maintained as an electronic copy, original copy, or both, and they need to be in English. So this requirement is different from an audit obligation you might have. For example, an audit obligation will be a decision made by your not-for-profit, whereas everyone has a requirement under IRD to save records for 7 years. You're also required, when requested, to provide a tax return showing all funds earned in any year with sufficient detail of the source and application of those funds. So it's really important that if you finish your term, you need to pass this on to your next treasurer. So these records need to be well maintained and easily understandable, because the next treasurer may not have the same level of financial literacy. Also, the current treasurer has a responsibility for the last 7 years of reports. So you might want to chase them up if these aren't well maintained, because it is your responsibility to keep these. Cool. So pay as you earn, also known as PAYE. So many of you might have heard about this. This is the portion of money that an employer will immediately take from their employee's salary or wages to pay to IRD on your behalf. So for things like reimbursing a volunteer, This is tax exempt income, so there's no PAYE tax required. You do still need to record this, so either record the actual cost or estimation. For payment of an unusual service, this is liable for PAYE and is called honoraria. So this could be paid to employees. In this case, use the IRD PAYE calculator to work out the amount of tax you need to pay. This is just on their website. And you also have to pay PAYE for a non-employee. So a non-employee would be someone where you have someone come in for a presentation or a talk, so not a regular occurrence. Something like a contractor, for example, is more likely to provide an invoice for services rather than qualify as a non-employee. However, there are cases where contractors qualify as non-employees, so you probably want to check this out. So for clubs and services, you must file an IR9 tax return each year unless you only derive exempt income. So exempt income is things like jurors fees, ACC payments, reimbursement payments of employee expenditure. And this taxable income is based on your net profit or loss, and that is where net profit is your profit after expenses. So I've got some examples up here for income that's liable for income tax and income that's not liable for income tax. So things like interest, dividends, gaming, machines and rental income, admission and affiliation fees, sponsorship and advertising income, and hall or equipment hire and sale of purchased goods are all liable for income tax. So this is when clubs and societies get into a bit more of a commercial based operations than other not-for-profits. So those are examples where income is liable. Income that's not liable are things like subscriptions, donations or grants, raffle proceeds, income from sale of donated goods and services, and income from sale of assets or equipment. There's heaps more information on this available on the ARD website under the title Income Tax and GST for Not-for-Profits. So income tax for charities. Registered charities with an income tax exemption do not need to file income tax returns unless the IRD asks you to do so. So you can check if you're registered as a charity on the charities register at charities.govt.nz. It's super easy to do. So to become a registered charity, you must meet certain criteria. The big ones are that your constitution or trust deed must include the charity's purpose and activities, and these must be exclusively charitable, and none of the charity's income may be used or available for use to benefit any of its members, trustees, or associates. So GST, you're only required to be registered for GST if your charity has income before expenses of $60,000 per annum. Registering for GST does have benefits, but it also has its own obligations. And if you're under this threshold, which many of you should be, it's a lot easier not to register for GST. Regardless of your GST obligations, you should make a note into the notes to the performance report stating your GST obligations. So this is the really important one. So there are penalties for non-compliance. So a revocation and deregistration of charity status and then continuing to operate as a charity can result in fines payable up to $50,000. So the individuals responsible for the governance of the entity, so this would include the treasurer, can be held personally liable for these fines. So if you aren't sure of your charity status, check on the Charities Services website or seek further advice. You can't ignore the IRD, and this is a really important note to take away. I'm now going to pass on to Xin Yi for treasurer responsibilities.
Thank you, Zoe. Hi, I'm Shini. So as a treasurer, we have other responsibilities such as managing cash, audit obligation, preparing treasurer financial report to the boards and members, meetings, AGM, and fraud prevention. When preparing a financial report, a treasurer has to consider some of the common transactions that would occur in your charity, as in where would this transaction fit in a statement of receipt and payment, a statement of resource and commitment. For example, for statement of receipt and payment, donation, fundraising, and other similar receipts will go into the operating receipt category. payment related to public fundraising will be under operating payment category. Furthermore, for statement of resource and commitments, bank accounts and cash will go under the category of resource, and money payable by the entity will be categorized under the commitments. Further classification of the above is on the charity.government.ng. Next will be the regular meetings. During meetings is where you voice any concerns or queries, bring in and discuss a monthly financial report and discuss the following, such as new ideas, problems, opinions, and further future fundraising, as in whether the company has enough liquidities. And I'll pass it to George.
So hi, I'm George, and I'm going to be talking about audit obligations. So many small charities go to the expense of an audit or a review, but it actually may not be necessary. And we'll look at the exact requirements on the next slide. But an audit or review may also be required by your charity's governing documents, so your constitution, your rules, your deed, etc. you have. And if this is the case, you need to make sure that you do get your performance report audited. So if the governing group decides your charity does not need to have an audit or review, then you need to make sure the governing documents reflect that and the charity services are aware. So in terms of if you actually need an audit or review, there may be legislative requirements under the Charities Act 2005 that you need to abide by. So if your expenditure is below 500,000, you do not legally require an audit or review. If it's between 500,000 and 1 million, you will require either an audit or a review. It's up to your discretion. If the audit is above 1 million, the charity will then require an audit by legislation. So if you are tier 4, then you won't need an audit or review, but it should be noted that you may require by your rules, so your trust deed, your constitutional charter, as mentioned earlier as well, or like as a condition of receiving a grant, potentially to have your financial statements audited or reviewed. And a big thing to mention as well is if you do have in your governing documents that you require an audit or a review and you are tier 4, and so you don't actually need an audit or a review, then you can discuss that at your annual general meeting if you actually maybe don't need that requirement and if that transparency isn't required, or maybe perhaps you want to integrate it into your governing documents and you want to make that a requirement and obligation to abide by. So what is the main difference between an audit and a review? So, there's 3 main differences. Firstly, the level of assurance provided, the report provided at the end of the engagement, being that an audit or a review, and also the nature of the procedures involved. So firstly, the level of assurance. An audit provides reasonable assurance, but not absolute assurance, whereas a review provides limited assurance. So basically, as a result, it will provide a different level of comfort over the financial position and how it's being fairly represented. Then secondly, the report that's actually provided. So an audit provides statements similar to, in our opinion, the financial statements fairly reflect, for instance, the financial position of the charity, whereas review will be, nothing has come to our attention to lead us to believe the financial statements do not fairly reflect the financial position of the charity. So this just furthermore shows a difference in the level of assurance provided. And also a big thing is the nature of the procedures you'll have to go through. So for an audit, procedures normally involve detailed testing of accounts and records. So this will result in a lot more, more of an intense and in-depth process requiring more information from the charity. Whereas a review, they're primarily based on inquiry and some analytical review. So it's less in depth. A review is lighter and cheaper as a result. So it's a great way to get a good level of accountability and transparency for a cheaper price than an audit if you don't actually need an audit. But to sum it up, at the end of the day, if you don't require an audit or a review, then you don't need to go through that whole process. However, engaging an independent, experienced person to perform an audit or a review will provide some level of comfort to those charged with governance. Financial position is fairly represented. So it's just great in general to have an independent set of eyes to have a look at and make sure everything's running well. So now I'll pass on to Felix to talk about fraud and fraud prevention.
Thanks, George. So now we'll move our discussions onto what fraud looks like in the non-for-profit setting. This could include stealing donations, unauthorised diverting of funds from a charity bank account to a personal bank account, unauthorised use of charitable resources for personal benefit. So that may include maybe using fuel cards, supermarket vouchers, or even overseas travel. And fourthly, misusing grants. So such as underspending on the grant and then manipulating documentation to hide where the money has gone. A recent example of this actually happened in Mosgiel, where a couple stole $6,000 from a wrestling club. This problem basically arose from not having separate personal and charity bank accounts. But don't worry, fraud can be preventable. And on the next slide, we'll look at this. So what can you do to stop fraud within your non-profit? Well, firstly, I want to make the first bullet point a point of emphasis, as this is one of the easiest steps to implement. Making sure you have a separate charity bank account and a personal bank account. Secondly, have clear written financial procedures. This could include always having 2 people involved in the handling of money and checks and approving invoices and bill payments. Alternatively, if cash has gone to someone's house, e.g. collected over the weekend, make sure it's secure in a lockbox, agree on the amount of cash, and have a second person take the key home. And also just make sure to check your official bank statements regularly. Thirdly, be secure when banking online. So just choose strong passwords, change them regularly, and limit who can have access to them. Fourthly, limit cash handling and have strong cash policies. So just limit the amount of cash staff and volunteers handle. Large amounts of cash can encourage theft and fraud. After collecting maybe large amount of donations, the quicker you can bank these, the better. Fifthly, regularly check your accounts and grant funding. So just make sure people in your charity understand their roles and responsibilities when it comes to finances and have the right skills and experiences to carry out their roles effectively. Point 6, define financial responsibilities. So members on your board should feel comfortable asking questions about the charity's finances, and managers of charities should make sure staff are accountable. Point 7, ask questions. No question is a stupid question when it comes to fraud prevention. The 8th bullet point, develop a fraud prevention policy. So this could be just make sure to document a process on how to prevent, identify and respond to incidents of fraud. And just make sure staff, members and volunteers are familiar with it. The last point is just segregation of duties. So this is quite important because you just want to make sure there's a lot of people across things, and when roles do change, maybe you may change the treasurer role and they have access to the online banking. Just make sure to change the password. It's much easier to do when the role has changed rather than a couple of years down the road. I'll now pass you back to Shania to look at AGMs.
Thank you, Felix. For every year AGM, treasurer have to prepare financial report for their interest parties. In the treasurer report, you should include what money we started with, what money we have spent, what money has come in, and what we have now. And I'll pass it to Caleb.
Thank you. So now we're moving on to some accounting software that you can use. And there are 3 main types of accounting software available to manage your charity's accounting needs. These include Xero, myob, and Excel. We'll go through these now, starting with Excel. So Excel is a very impressive tool that can manage basic accounting needs. The key advantage of Excel is that it is free, which is perfect for some charities which may not gain much value in investing in a subscription to accounting software. If Excel is a suitable option, DCA will be more than happy to set up an Excel workbook with you. Now, Xero is the next one I'm going to talk about, and this is a very popular choice due to its ease of use and online nature. Xero can be accessed by any device via a web browser, thus giving you access to your accounting information anywhere. Some key features include easy online GST filing, fast bank reconciliation, and online quotes and invoicing. You can also complete various courses with Xero in order to learn the basics and upskill to be a more advanced Xero user. The Xero website has an abundance of further information you can read up on to determine if this is the right choice for you. Next is myob. myob is another popular accounting software that might be worth looking into. A key difference between myob and Xero is that myob lets you work offline, whereas Xero has to be used online. Being able to access telephone support and speak to an actual person 7 days a week is another advantage if you are experiencing any difficulties. Now we're going to have a look at the breakdown of the cost structure between Xero and myob. And if you want to get any further information about the details of either software, you can go to their respective websites. So I've just got a few points about the pricing of these. So they might seem expensive at first, but you might find that it's probably worth it for the ease of use. The time to use Excel will be much longer than what it would be if you were to just use Xero myob. And so you'll most likely find that it'll be more cost efficient to just use the accounting software. Another point is that if you were to ever get a new treasurer, it'll be much easier to transfer the accounting records and everything over to the new treasurer rather than trying to teach them how to use your Excel workbook. And another advantage of using Xero or myob is that you can have multiple users. This allows for different people to have access to the accounting records and check that everything is as it should be. So this just avoids any potential mistakes. You have two sets of eyes looking at all your work. And so with Xero, there's an option of a cash book. And so you don't have to subscribe to the full package. And you can just go for the cheaper option, which for many of you can probably do everything you need. And that is only $12 a month. And I would highly recommend doing that as a minimum. So that concludes everything we've got today. And Mohammed will go through some final points with you.
Thank you. So the final points for today's webinar is that be aware of the New Zealand legal framework that you are operating under. Become familiar with the tax obligation if or when paying people. Get to know the key accounting concepts. Ensure you understand the expectations for reporting to your board. Check your adequate controls and policies to protect you and others. Review accounting software to make sure it's fit for purpose. Be honest, transparent, and pay attention to the details. And enjoy adding value to your charity by being a treasurer. So basically, now we move on to the questions.
So that's the end. It's Annette speaking. I am one of the supervisors here at DCA. So I want to thank the students for talking tonight. They put a lot of work in this presentation and it's really helped them get an understanding of not-for-profit, the world that's out there and the not-for-profit sector. So now you can, if you'd like to, you can just leave. But we do want to draw your attention to DCA is open for one-on-one sessions. So if this is some questions that come out of tonight, we'll hang around for a little while and answer them. But if you've got any questions you'd like to actually come and talk to the students with and get some of that one-on-one help, then please you can make a booking either by giving us a call, you'll get to talk to me. You can email us at cura@dca.org.nz, or you can pop onto our website and actually book online, and that's quite convenient because you can pick your time when you want it. So, and I do recommend that you do that soon. Our students all head away at the start of October onto exam leave, and we don't recommence till March. So if you've got any questions that you need answered fairly soon, then I recommend that you make it. But if there are any questions, can you please just pop them through in the chat box now or in the question and answers, and we'll just sit here for a few minutes and just answer any of those. Just got a question about the Xero Cash Book. Is that right? So what was the question? Sorry, I can't see it in front of me.
Can you describe Xero Cash Book?
Okay. So Xero, if you're, I'm happy to do it because I use it quite regularly. and the student's probably less familiar with Xero. Is that correct? Yeah. So Xero Cashbook is the key to it is that it's just cash coding. So you get a live bank feed. I think that's the advantage of having it. You're not having to input your bank statement into Excel or transfer it onto a ledger. So there's no errors. So and you can just code as you go through the month. You've still got access to reporting, so you can still do your GST reports out of it. You can still do profit and loss reports out of it, and things like that. But you haven't got access to being able to invoice. You can't raise bills. You just pay your bills online as you normally would. But it's actually quite a useful tool for people that are a small organisation, because we've talked to the students about this, that your time is very valuable, and $12 a month. If you think what you would, if you're working, what your hourly rate would be, and if you spend 2 or 3 hours working on the accounts each month, $12 actually doesn't sound too bad. So that's what and it just helps, like the student said, of that ability to transfer the treasury role onto someone else, because people are a lot more comfortable dealing with something like that than dealing with a spreadsheet or even a paper ledger. So hopefully that helps. Here's your question. Right, so we've got another question here. If the non-charity organisation with monthly transactions minimal except for occasional events, will the accounting software be recommended or needed? So again, that's up to your discretion. If there's only 2 or 3 transactions a month, you might find that Excel or a paper transaction is fine. Does anyone else have any comments? So which one? Second, so I'm getting questions here as well. So we might be getting questions in 2 places, but that's all right. We'll carry on. I'll just finish that one. So it's up to you. Again, it comes down to the size of your organisation and the cost, and whether you think that would be valuable. And so it's a conversation to have with your team. And but again, $12 a month isn't too bad. But again, if you're very small, you may decide that it's not necessary. There's no reason. Excel is perfectly fine. Even a paper ledger is absolutely fine. It's just ease of use and what people are familiar with. Okay. Next. Right. Accounting student, yes, the DCA will be up shortly. We're just talking with university, so that usually towards the end of September, early October is when you can apply. So we'll get that sorted for you. Thanks for your answer. Please welcome to set up a review committee to look at annual financial. Yeah, these are getting a wee bit. Yeah, it's tricky with the audit and review. One, DCA, we stay away from giving financial advice, and that's where audit and review come from. So that's not something that we will do, and it's not sort of fair on the students or the accountants. It is a tricky one, and it's an area that we know is a bit of a deficit in the community, because we often get a call, can you please find who can review my accounts? And it's even a wee bit ambiguous who is qualified to review, but sometimes people are using bank managers or former bank managers, former accountants, someone that's got some financial acumen. But it's possibly worth asking around other committees in your area and other people in the community who they would recommend. Yeah.
Yeah, a quid pro quo arrangement it could work. If you find another similar organisation, you've got somebody on your committee who's able to look at their finances, and you can do the same for each other, and would be one way of doing it. And so we've got a question around waiting times for meetings. And so, well, during term time, which is when the students are here, it's every Monday. So if you try for an appointment at 4:30 on a Monday, then you can see them within about 45 minutes. If you apply at the start of the summer break, it can be a few months Yeah, getting in touch, and we'll get to people pretty quickly. We encounter people who, despite having 6 months from the end of the financial year to get their annual accounts done, are 3 days away from that deadline. And so, we can't always respond within that kind of deadline. But as come your year end, get in touch with us, and we'll definitely see you and be able to help you before the deadline comes up. I'm not seeing any other questions that we've not
They might be in the comments section as well.
dealt with.
This is the comments section.
Yeah. Okay, going through chat. Right. Yeah, Annette just covered applying for next year, and so they'll be advertised shortly, and you should see them in the lectures. And yeah, specifically around the average wait time, I think we're here on Monday, and there's a space. So yeah, if you book that, you can give us a call or go online at dca.org.nz. So does anyone else get any questions you want to pop into the question and answer? Or I've just arrived here. My name's Rob, as the new voice at the end. And so I'm not sure, did the non-charity organisation monthly transaction minimal except for the occasional events when the accounting software be recommended or needed? Was that what Annette covered? Yeah. And so over in the chat, there was a question around zero cash book, and that kind of covers that as well.
Yeah, they covered that.
Something that came up for me today when I was talking to an organisation was that they were seriously undervaluing their own time in considering whether to pay for software or not. They were spending a lot of their time when they could have been doing good things, and instead were doing administration. And so it is worth remembering that saving yourself time is valuable. And so we do have a macro template to get from bank transaction to financial statement by tagging transactions. I believe there is a Christchurch organisation that has such a thing. I know that because somebody brought one along to a session and we had to try and debug it for them. I think that it worked. They deleted some lines and it ceased to work. So no, we don't have that. It's quite a complex thing, but an Excel spreadsheet will give you the answers fairly easily if you add a column and put it into the right. So you take it out of your bank account in a CSV format, open it up in Excel or Google Sheets or LibreOffice, add another column and then tag it. You can then filter or group by that tagging, and that should give you the numbers. And if you need assistance with that, just make an appointment. I'm sure there are people who are even better than me at Excel. Everybody's staying silent, they didn't answer. What are the income tax requirements? Please explain again. And please say what the outgoing treasurer should have supplied. So the outgoing treasurer should have applied. Now, some of you were here when we talked to the CA the other day about this and their obligations. Is the information and all the items belong to the organisation, not the treasurer. So they should hand over anything that relates to the organisation. So whilst there's no definitive list of what that is, the only person who's really going to know what information they collected is the outgoing treasurer. They should hand all of that over. If you have come in as a new treasurer and you feel something's missing or you need more information, then I'd suggest again booking an appointment with DCA So dca.org.nz, come along, talk to us face to face, and or over Zoom, one-to-one, and we can have a look and see what you do have, what you don't have, identify any gaps, and then look at how we can fill those gaps. And so there's another question about income tax requirements. I think they've been mentioned a couple of times, and again, it might be better to see face to face and look at your specific situation, because income tax requirements vary quite a bit. As it was in the presentation, it depends on your situation as an organisation.
Yeah.
If you're constituted, not constituted, how you're constituted. And so without knowing that, it's difficult to go into the specific.
So it's different for registered charities to unregistered charities, and then for clubs and societies. So if you're a club and society, you have to file a tax return. And then registered charities with an income tax exemption don't have to. GST, less than $60,000 per annum. If your charity has income before expenses, so it's less than $60,000 per annum, you don't have to be registered for GST. It depends on your situation though. And if you aren't sure if you're a registered charity, you should go and check at charities.govt.nz on the charities register, and that will tell you if you are registered and if you have an income tax exemption.
Yeah. And so there's a question there about the appointments again at either 5:15 or 6 p.m. They're either at 5:15 or 6 p.m. If those times don't suit, give us a call. We'll work something out, and we'll make it work for you. And another question there around for audit purposes: how does an organisation record receipts and invoices by accounts or by projects or based on category in financial statements? Again, this is getting into the nitty-gritty of your organisation and what you need to do. Without knowing what you consider a project or what an account is for you, because there are bank accounts and then there are accounts in other ways, and then the category. And ultimately you can't do it by accounts, by projects and category from the financial statements. If in assuming you're using a spreadsheet, you download each bank statement, you put in 3 columns. And one of them shows you which account, one of them shows you which project, and one of them shows you which category for the financial statements are there. Then you can buy any one of them. And if you're feeling flash, you can do a pivot table and pull all that information out and group it together. And the really key thing here is being systematic and making sure that you understand what the categories are, and that if you choose to sort by category, then things can't be in more than one category. Otherwise, you're going to count them twice, or not at all, or in their own category. And so you have to be quite organised and make sure that you list them well. And we've got a thanks for answering all their questions. And I don't think there's anything else going on there. And of course, as I've said several times, talking to us face to face, having that appointment. So there are Monday appointments in the evening, Wednesday during the day. If those times don't work, speak to us, and we'll see what we can do. Because we're here. The experience the students get from answering your questions is fantastic. It gives them a real understanding what's really being dealt with out there, and it also allows them to a bit of a focus on non-profits as well as business. And, there are more businesses and non-profits, so by necessity they're learning about businesses, and this gives them an opportunity to look at something else. So do make those appointments, come along and ask us those questions. So I think we've exhausted the questions. Excellent. So, well, I shall say from Dunedin Community Accounting, thank you to all the students for having put this effort in, and thank you to all for coming along and asking these questions and joining us for this. I've certainly enjoyed bringing it together and working with the students so that they can make this happen. And We hope to be able to see you face to face or by Zoom sometime soon if you've got any queries. That is if, of course, all your questions weren't answered tonight, and you may be sorted and off you go. But if not, you know where to come, and we're here, we're not going anywhere, and we'll always try and help.